Mic check. Mic check. Mic check. Mic check. Mic check. I don't know. I don't know if these are going to work. Mic check. Mic check. Okay. Maybe you can hear me. I don't know. Bear with me, guys. Oh my gosh. Okay. Bear with me. It's been a while since I've went live, and I don't know if I don't know how things are going here. Don't know how the audio is here or anything, but I'm gonna make this happen. It is FOMC day, right? It is also, man, let's see. I don't know how that sounds. Let me see. Hold on, man. Hold on, man. And like my camera, my green screen, bro, my chairs, it's you know, it's a wild day today, man. Mic check 1 2. I see Todd BTC is here, man. Tall man Todd. I see you changed your name there. Tall man Todd. Okay. Mic check. Good. Is it good though? Because this thing keeps on messing up on me. I can't hardly move without it messing up on me. Let me see. How does that sound? Does that sound good? Is that crisp? Is that crisp and clear? We are live though, man. I haven't been live in a while, and it's kind of got me a little bit, I don't know. I feel like if I move my head, man, I think if I move my head, the microphone is going to mess up. Hold on a sec. I may have to just do something about this, you know? I may have to just do something about this, but it is FOMC day, and I had to go live. Okay, I was supposed to go work today, actually. I was supposed to go do some work, make some cash money, you know? But also, it's also something else. It's a family member's birthday. What the hell, man? All right, man. So I do have that to do later. What the? Are y'all hearing that? Do you hear that? Do you hear all that messing, all that crap? Bro, I have to. Okay. I'm gonna figure this out. I can't hold my bro, I cannot hold my I can't hold the microphone, or I can't hold the thing in like this the whole time. Okay. All right, so son of a bitch, man. Okay. Oh shit, I think I just broke it. I think I broke. Oh, I really broke it. I really broke it now. Oh, I really broke it. Dude. Oh, it's broke now. Yeah, I pushed too hard. Hold on. I pushed way too hard. Now it's really broken. I don't know. Can you guys still hear me? I pushed too hard on it, and I busted something. And these are some good headphones, man. It's okay. What's a guy gonna do? You know? Okay, I got to get us ready here. Jerome Powell's final stand, guys. His final stand. I got to get us set up here though. But it is Jerome. Oh my. It is Jerome Powell's final stand. Whoa, it sounds good now. Whoa, what happened? It is Jerome Powell's final stand. It is FOMC decision day. Hey, it sounds good now. What? Okay. Maybe if I just don't move. If I just don't move my head, if I do not turn my neck, then I'll sound good. Todd, where you at, bro? Is it still good? Let's get it on then. All right, let's do this, man. Let's do this. Let's do the dang thing. I don't know, maybe I fixed the headphones by smashing that in there. Because it definitely sounds better. Okay. I'm digging this. All right. Where am I at here? Too much going on. Okay. But we are prepping for Jerome Powell's final FOMC meeting and press conference. Covering that ish live here. Before we cover it, that's coming up, man. That's coming up at... Oh, we got just a little bit of time here. We actually have just the right amount of time. Right? We got just the right amount of time to go over a few things before we get the live press conference. Jerome Powell's final live press conference. So we got just enough time for that. You know, all right, guys. Here we go, man. Here we go. You know what I'm saying? I mean, it's coming. It's the waiting room. Bro. We're going to mute that, though. We're going to mute that and... Okay, so... I have not actually shared the stream yet, so let me take care of all of that good stuff here. One sec. Where is this at, man? Where is it at? Ah. I have two of those going? Really? What the heck? That doesn't need to be happening. I got too much going on. Okay. All right, guys. Here we go. I mean, I really don't know. What the hell? All right. Let me get ready to share this out real quick, but then we're going to do a little recap on some of the things that have happened here recently because I've been away for a bit. So, but All right. Now, let's get into it, man. This is the deal. This is the deal. I've been focusing a lot on trading lately and doing a lot on X. So if you haven't followed me on X, definitely follow me over on X, because I am definitely doing a lot over there and keeping things updated over there, especially with like trades and just other stuff like that. And you know, for example, like my Doge trade worked, you know, it played out beautifully as expected. Honestly, a lot of the calls that I've mentioned, if you guys remember, have been playing out beautifully as expected. When it comes to the rounded bottom for Bitcoin, and then of course my Doge trade, doing very well also. So definitely, if you haven't followed me on X, definitely follow me over on X. We are now looking at a pro crypto Fed chair, right? Kevin Warsh, the Warsh Wash, coming soon, Wednesday morning. The Warsh Wash. Now, having a pro crypto Fed chair, you know, what is that going to mean for the price action here, man? Right? And I've been watching Dogecoin, been trading Doge, and you know what? What a beautiful trade, right? What a beautiful trade. Caught it perfectly, actually. On this back test, back down to, I mean, we could even go below 10 cents, but Doge rounded bottom. I mean, when you see a rounded bottom coming up, you know, it's just something that you can see, right? It is something that you can see. Now, I don't know how this looks to you guys. Honestly, I don't know if I don't know how this looks to you guys, man. But Doge performed beautifully. We did break up out of the threshold there, what I like to call that threshold, right? We broke through it, and now we're back testing it. So getting in down here, which is, oh man, see, which is right where I did enter that trade. That we just closed. I mean, I closed the trade. Right? Just close the trade right there. So that was beautiful, you know? That was beautiful. I mean, honestly, it was textbook perfect. More than beautiful, it was just textbook perfect. That was the current price. Where is where I closed it? Close the trade. I mean, that is how it's done, you know, because you don't want to sit up here at the top and wait for, like, you know, some more. You all right? That's that greed. You know, that's that greed kicking in. We can't have that, right? By the way, guys, if you're just now joining, don't forget to smash the like button. We are going to be tuning into Jerome Powell's final press conference as Fed chairman of the Federal Reserve. So don't forget to tap the like button, please, for the algorithm, man. If nothing else, man, help a bro out. Tap it, smack it. But this is what we're trying to do, you know? This is what we're trying to do. We want to hit these moves. And you know how we do that? Patience, man. It took 9 days. 9 days, 9 days to get that trade. But let's see where I closed the trade. Close the trade. Closing price. There it is. Close the trade. So, again, if we look back, that was beautiful, right? If you look at the chart, and if you look at where I opened the trade at, 09468, zero 9467, 09468, give or take. Smash the like button if you haven't yet. Thanks for joining us. We're waiting for Powell. It's gonna be weird saying Warsh, you know, because we've been used to being able to say, like, the Powell pump, you know, the Powell pump. I commented on X and I said it's gonna be the Warsh washout now. It's gonna be the Warsh wash. What is going on, Deadwood? Welcome back. Good to see you. Good evening. Good morning. So where I entered the trade, 09468. And I've been following this, and that's why I say follow me on X, because I've been posting a lot more on X, trying to grow on X, and, you know, showing my trades and setups and everything on X. So definitely check links in the description. Also, lots of bonuses in the description if you want to get in on that right now. But 09468 was the entry on that Doge trade, guys. So this was the entry. 09468 was the entry right here. It took 9 days to wait for this break, and what I call that threshold, right? That threshold here was all of these resistance levels that seemed to kept getting rejected so violently. You know, when you see all of these areas getting rejected like that so viciously, especially when they keep on happening, that's like when it breaks that threshold. I'm waiting for it to break that threshold. I knew my entry was good because my stop loss and my liquidation level was well below where I could put my stop loss around the support, right, of the rounded bottom. And once I seen the rounded bottom, you know, good to go there. So my take profit, where was my closing price? 10,980. Okay, 10,980. was the closing price. No, I didn't catch the damn wick. I almost had the wick, man. I'm not gonna lie. Almost had this wick right here. That would have I almost had that wick at 11.11. 11 1 or 11157. Almost had it right there at 11 cents. But I didn't catch the wick. Would have been like another extra like $100 right there just for catching the wick, but I did manage to catch the top right there. What was that closing price again? 10,980. 10,980, bro. 10,980 right here. Even above the candle closes, man. Even above the candle closes, I got in there. So thanks, Deadwood, man. I appreciate you, bro. Anytime we see a rounded bottom, man. Anytime we see a rounded bottom, man. The rounded bottom's playing out. Playing out. Rounded bottoms playing out. Rounded bottoms all day. Okay? And you know, we got a song for the rounded bottoms. Because not only did we call the Dogecoin rounded bottom, but that's right, we also called the Bitcoin rounded bottom. And you know what? You can literally ask Grok. You can literally ask Grok. Let's just go ahead and ask Grok. Let's just go ahead. Let's just go ahead and ask Grok, man. Okay? Okay. Let's just go ahead and ask Grok. Okay. Grok, I need you to analyze my X posts from the beginning of this year and tell me my accuracy on Bitcoin and Dogecoin. Okay. Why is this so big? Okay. Now let's see what Grok has to say. Okay. Okay. Fingers crossed right now. That chart reminds me of how Ondo looks now, well pre-pumped. Old Crow has been beat down in the trenches. Old Crow, man. Crypto.com. Thank you guys for joining us, man, by the way. Thank you for being here. If you haven't yet, welcome to the channel. Check us out, man. Been around for a long time. If you feel like it, hit the subscribe button, smash the like button. It'd be greatly appreciated. And answer the poll in the chat, by the way. We're waiting for Grok. Grok is really thinking hard about this. I mean, it's really analyzing every single post of mine to determine my accuracy on my Bitcoin and Dogecoin calls since the beginning of this year on X. And this is why I keep saying, follow me on X. You know, Greenfingers finally commented on something on X, Deadwood. Oh, Powell, man. Listen, his final rate decision. His final rate cut. I almost said rate cut decision. Uh-oh. Watch Powell come in and be like, you know what? I'm just going to go out. I'm going to go out with a bang and just cut rates right now. I'm just going to cut interest rates right now. I'm going to go out with a bang. Oh, okay. All right. I should have done quick answer probably, because this is going to be a lot. We're not going to read all of this, right? But let's see what Grok says about my accuracy on X with my Dogecoin, Bitcoin calls. Let's see what this says real quick. Let's see what this says real quick. Okay. All right. Your X posts from January 1st onward show a strong focus on technical analysis for Bitcoin and Dogecoin, with activity picking up noticeably in March and accelerating through April. No major Bitcoin Doge prediction style post turned up in January, February from the searches. This should be, that might be incorrect, but let's see. So the record starts with your March calls and builds from there. I had calls in January. I had at least predicted assumptions of a rounded Bitcoin bottom in January. I pulled and reviewed all the relevant posts matching your keywords. Okay, so on March 3rd, what are the odds Bitcoin forms rounded bottom? Spot on. By mid to late April, you were referencing this exact call as playing out perfectly. Okay. Green is on X now, yes. Green is on X. So my March 3rd call for Bitcoin around 67K, calling for around, look at this. This is where it gets really good. This is where I have to give you guys this, because this way you know why you should be following, why you should hit the subscribe button, why you should go follow on X, why you should not sleep on Average Joe Crypto. Average to savage is the motto for a reason. Okay? Taking the average Joe to Savage Joe. That's been the motto for a reason, and this is the reason. Because if you look, Grok is even telling us here that by mid to late April, you were referencing this exact cause playing out perfectly. I will keep going back to this. Bitcoin rounded bottoms. And now look at us. Silent the musician, thank you, bro. I appreciate you. Welcome to the crew, bro. Welcome to the AJC crew. Now, rounded bottoms. Now look at us. Bitcoin had rallied hard from the 60K area into the 77K, 80K zone. Pattern recognition nailed the bottom there. Nailed it. You highlighted an asymmetrical triangle on the Bitcoin chart, noting tightening range with measured move targets of bearish 52K if support broke, or 90K bullish plus risk of a temporary bottom bounce in April, followed by possible rejection. Accurate on the bullish path. On April 22nd, you confirmed the Bitcoin asymmetrical triangle pattern played out as expected. Bitcoin is closing in on 80K. Support held and upside momentum followed exactly as I laid out. April 22nd to the 29th, multiple posts calling Bitcoin's charts not bearish, pointing out the 100-day flipping to a potential 50-day flipping nearing golden cross, rejecting bear flag narratives. You also flagged FOMC volatility, but the Dogecoin calls. Okay, so April 17th, you posted that Doge's rounded bottom was playing out identical to how Bitcoin formed its rounded bottom in March and went long with stop losses in the green. The outcome of this from Grok specifically, the outcome was excellent. I later showed that the entry is literally 0.09420 just for the meme. the 420 meme, and it was around 420, around the April 420. You were riding the move higher, and on April 29th, you updated that you closed the Doge trade after 9 days of patience to make almost 800% gains in Dogecoin. Precise timing on the breakout. Huge win either way. Now, not typical, right? But definitely, let's see. Not sure what's going on here with this, but that was weird. Was not digging that music, whatever that was. Now, I have other, okay, so look, this is crazy, right? Hit rate on explicit calls, 100%. Grok is telling you guys that I hit 100%. Grok is telling you that I hit 100%. Every major technical pattern that I highlighted, Bitcoin rounded bottom, the asymmetrical triangle, the Doge rounded bottom, either played out exactly as I described or delivered profitable trades. Bro, come on now. You got AI telling you right now why you should hit that subscribe button, bro. This is why you should subscribe. This is why you should definitely follow me on X. So look, I'm just going to go ahead and okay. Style strengths. Look, let's go on. Grok is giving you the freaking juice right now on why you should not sleep on this guy. Sticking to clean TA, rounded bottoms, moving averages, triangles, support and resistance flips without the hype. Openly discuss risk, could reject, bear trap possibilities, keeping you grounded. Smash the like button if you have not yet. I see 5 people here and only 1 like. Let's step it up a notch, people. Let's step it up a notch, people. Okay, just like I'm mentioning the FOMC volatility. And not only that, but also returning calls into actual gains, especially the Doge trade. And I even got external props from Market Profit on X. And that is where I got highlighted as a market profit for calling the Doge trade. That was interesting. Right? That was interesting. Where's that at? Right here. You're a top market profit for your call on Doge. Interesting, right? Now, I just can't stop. So turning these calls into actual gains was a big thing too, to be able to show those results in real time. So I've been accurate, according to Grok. I've been accurate on both Bitcoin and Dogecoin this year. Average Joe TA approach is clearly working. So if you haven't yet, and if you watch this replay, definitely follow me over on X. Now, we're waiting for Jerome Powell to show up, and I do hope that I get to see some of you guys up in this chat, getting active in the chat today, because it's going to be an interesting day, and I hope you guys get active in the chat. I'm gonna just check this real quick. What up, green fingers, man? I don't know. I don't know. I haven't went live in a while, so I don't know what happened with it, with the notifications. You know, there's something very important to notice here, really. Like, on the Bitcoin daily chart, There really is. There is something very something that might get overlooked. And that is this whole idea that we're in another bear flag. You know, there's a lot of people that are still giving you that whole bearish case scenario there. And that could still be the case. That could still be the case. But there is something else that I really think needs to be looked at. And it's just simple moving averages. But, you know, this is what I'm talking about. This is what I'm talking about. So there's a huge difference here taking place in the price action of Bitcoin. There's a huge difference happening right here compared to this. And this was totally a bear flag, right? Totally a bear flag, played out just like a bear flag. But there is something totally different happening in the price action of Bitcoin here now. And it has a lot to do with just simple moving averages. Simple moving averages. So, like I posted here, you know, those calling this Bitcoin chart a bearish setup or bear flag have missed something very important. Can you see it? Can you see it? The 100-day moving average is below the price action currently and could become support now. And so the 100-day moving average is right here. And what happened back here? Bitcoin got rejected by the 100-day moving average back here. So we got rejected here. But in this case, in the current price action, Bitcoin has already broken well above the 100-day moving average. And not only that, but we've got the 50-day moving average attempting to cross the 100-day moving average also. So there's a totally difference. This is totally different. This scenario here for Bitcoin is totally different than the scenario back here. And, you know, I think sometimes people just throw lines on a chart. And, you know, we can do that, right? This, if you put a line here, you put a support line here, you put a resistance line here, and they look very similar. You could put a couple of lines in here and it could look just like the same thing, right? It could look just like a bear flag. But if you look at the moving averages, I mean, if you look at the moving averages and other indicators, there's a whole nother story being told right now about Bitcoin in the price action currently. There's a brand new story being told. And all you've got to do is pay attention to some of these moving averages and you will notice. And what needs to happen now for Bitcoin is this cross here that happened where let's see, we've got the 21-day moving average crossed the 100-day. So we need to see if that holds. We also want to get the 50-day to cross the 100-day there. And you can see back here, we were nowhere close to any of that happening back here. But now the price action is showing signs of this happening. So this could be a totally different setup if the 100-day moving average holds support for Bitcoin, which is going to come in at about 72,800. About 72,800. If that can hold support, then there's a good chance that we may not get a bearish continuation yet. This support must hold. But definitely a totally different story right now. Same thing with the 2-day. If you look at the 2-day Bitcoin chart, if you look at the 2-day, look at what's happening here with this cross. Nowhere close back here. Okay, so sure, call that a bear flag. But what this is not a bear flag. In my opinion, as always, nothing here is financial advice. Nothing here is financial advice. Deadwood, right. Ethereum, we've waited for so long for ETH to do something. The stream crashed out on you. Hopefully it wasn't on my end. We already have enough issues. Are we good? Hey, maybe we'll be all right, man. Maybe we'll be all right. Had some issues in the beginning. But hey, you know what? We're going to prep for this FOMC, man. This is one of the biggest FOMCs ever, bro. Until the next one. We about to prep. Hey, how's the music, man? Yo, how is the music? Somebody tell me. Is it straight? Is it good? I mean, this is my jam right here, bro. This is my jam. Strap in, boys. Strap in, boys. Strap the hell in, man. Rockets only go up. Yo. All right. Look. I didn't even get a workout in this morning, man. I should have got a workout in. You know, then I could have been pumped up for the Powell pump, you know? Is Powell going to pump the altcoins? Are we finally going to get an altcoin season just because Powell's finally leaving? Are we going to finally get some altcoin action? I'm just kidding. We've already been seeing some decent altcoin action. Yo. I mean, across the board, but how do you guys feel about Powell being replaced by Kevin Warsh and him being pro crypto? I mean, rate cuts are inevitable at this point, right? Interest rate cuts are inevitable at this point, right? Correct me if I'm wrong, but they are inevitable. Are you guys prepping for this FOMC? Like, what kind of questions are going to be asked? You know, it's the last time the press can ask Powell questions. I mean, what are they even going to ask him? You know, like, what are you going to do? What are you going to do, man? Although he will still possibly remain. He will still possibly remain on the board, just not as Fed chair. So to keep that in mind, we may not be totally rid of Powell yet. But the FOMC meetings and the live FOMC coverage here is going to be legit. But the FOMC press conferences going forward, I think, are going to be a lot different, right? With a new Fed chair, with Kevin Warsh, I think things are going to be a lot different. Better for crypto? Better for Bitcoin? What about that Bitcoin conference, man? XRP Army, where are you at? I've seen nothing but XRP all over social media. All over social media. It's been crazy. There's no telling what they paid for all of that advertising. I don't know, man. When you gotta really, like, I mean, I guess I get it, but at the same time, when you're paying that much for advertising, you shouldn't have to do that, right? If the product, if your project, you shouldn't have to do all that, man. Where the XRP Army at? I'm just playing. Don't hate. Don't hate, man. Don't hate, hydrate. All right. Look, my green screen's all messed up. My camera's messed around. I don't care. It is what it is. It is what it is. You guys with me, though? You guys rocking with me, man? Y'all prepping for this or what? Y'all prepping for this FOMC right now? Are we ready? Are you ready? Because it is almost that time. Keeping them in line. Fueling the engines. Let's go, man. Let's go, Green Fingers. I see Green Fingers is ready. Fueling the engines, man. And tapping the like button, right? Man, we have had... It's crazy, though. You know what's crazy? Wait. Only if we speak about the Doge long. I mean, the Doge long was perfect. Bro, that was perfect. So was my rounded bottom Bitcoin call. You just don't want to admit it, bro. But it was a perfect call, too. I called Bitcoin rounded bottom to 78 to 80K when Bitcoin was at 67,000. Green Fingers hated on me, but called me an up-only guy. But it literally happened exactly. Like, I mean, yes, we might have went a little bit up and down before we ran, but you can't hate. You can't hate when the proof is in the pudding, man. Bro, 78, it's all over X. All you got to do is use Grok, man. Get on Grok and just search my profile. And be like, when did this motherfucker say anything about 78K Bitcoin? That's what you do. Go on Grok, go on X, go on Grok and ask him, man. Get on there and ask him, bro. Just get on there and ask him. He'll tell you straight up. He ain't gonna lie to you. Okay? He's gonna tell you like it is. He's straight up gonna tell you like it is. He's gonna tell you that AJC knows what the hell he's doing. That's what Grok is gonna tell you. I'm not even kidding though. He like, go ask. Like, AJC knows what's up, bro. AJC knows what's going on. AJC knows his stuff, bro. I hope that you know, our fellows from the previous FOMC live coverage streams, live FOMC streams, I hope some of them can find us deep within the hidden algorithm here, man. I do hope that you live FOMC peeps can find us, because the last time was great, man. Great. Look, that's a different story. That's before I grew, okay? I've grown since then. But hey, guess what? It's still alive. We still got trades for days. All right? Trades for days, man. Trades for days. But this is the big question. What do you do right here? What do you do right here when it is looking just like before? What do you do with that? Yo, what is going on? Kayani, welcome to the stream, guys. Thank you for joining us, by the way. Appreciate you being here. I do have to go. Oh, no, I don't have to go anywhere. I take that back. But what are we going to do about this? It's FOMC day, literally moments away from Jerome Powell taking the stage for his final stand as Fed chair. Final interest rate decision, final press conference. What do we do about this right here? What do we do about this right here? What do you think will happen after Powell speaks? That's a good question. A lot of it's going to depend on this. The technicals. I do believe that a lot of it's going to depend on the technicals. Thank you guys for being here. So this is the thing. We do seem to be, if you look, so if you look at the moving averages, and if we look there and we look here, if you notice the similarities here, you're already 2 steps ahead, right? Thank you guys for being here. Don't forget to smash the like button on the way in. If you have not yet, show that love. I do greatly appreciate you guys being here. Champ, welcome in. Kiani, thank you again. We are awaiting Powell very shortly. I've been basically just recapping all of my solid calls on X, but what we're looking at now is, hold up. Let me throw my jam on real quick. Where's my jam at? It's my jam. Okay. Oh. Okay. I didn't realize that this was still on, guys. You got to tell me to turn that. You got to tell me to turn that off, man. Yo. Always got to do a little dance when I get a new subscriber, man. Thanks, Jeremy, for hitting that subscribe button, bro. Much love to you, bro. Welcome to the crew. Now, we were talking about this, right? The similarities here. Because the press conference is here in like any moment. At any moment. So we are right now testing the same moving average we tested here before breaking down. And so what we're going to see, does this 5-day moving average go ahead and get across like it did there and do the same thing here? I mean, we are setting up for a similar move to the downside. However, we have support around 72. $70,500. And I really like that 72. I really like the 72 range, about 72,500. I like this range of support that we're looking at right there. So that's what we're looking at, waiting for that. Now, this should be coming. This is any minute right now. Any minute. Thank you all for showing up and hanging out with us today for your live FOMC coverage and market reaction here. I happened to get a nice trade in ahead of this press conference, and made some nice gains. Woke up to some nice gains this morning and decided to go ahead and cash in on that ahead of the volatility from the FOMC. You know what I'm saying? Does not mean that I won't try to catch some more trades, but being able to cash in on some juicy gains ahead of this volatility, honestly, is just good for my anxiety, good for myself. So I did it. I hit that close button. I took my profits at the most perfect selling point ever. If you don't believe me, follow me on X and check out my recent post about my Doge trade, and you'll see the screenshots. The proof is there. But thank you guys for showing up here for your live FOMC coverage today. Don't forget to smash the like button, subscribe to the channel if you're new, and definitely check the links in the description if you want to trade crypto, gold, stocks, oil, metals on multiple different exchanges. We've got it for you, and multiple different bonuses going on right now for my partners, offering some of the best in the game for you guys. So if you're a trader and you're already trading anyways, why not capitalize with some free margin, right? Cash in on those bonuses. Of course, read the fine print and all that jazz. Make sure that you know what's going on and what you're getting into, and check the description for all of that. But the Doge trade was the one. The Doge trade was the banger. Link is failing, breaking $9 in minutes. So we've already seen. So question for the chat right now: is this press conference, and is this all already priced in? Because we've been seeing bullish momentum in the price action. Bitcoin ticking to the upside, breaking through, hitting my target 78,000, 79,500. Are we seeing this already priced in? If you're just now joining us and you have not smashed the like button, let me see how many of you guys can smash the like button all at once. I want to see it here in real time. I want to watch it happen in real time and see if it just goes up instantly. Bam, there's one. But that was just one. You're supposed to do it all at once. I got that one, though. I see you. Where's the rest of you guys at? I want to see it happen in real time. Come on. Can we get everybody right now to tap the like button all at once? I just want to watch it happen all at once. Can we watch it happen all at once? Can we watch it happen all at once? Can we watch it happen? Oh, look at you guys. I know who did that. I know who did that. I know who did that. I know who did that, bro. I thought maybe we could do a little thing and it would be cool, man. But obviously not. 75K Bitcoin support ahead of the FOMC press conference, man. Look, I thought we could do a little thing, man. I guess not. I was like, surely we could get everybody to smash the like button all at once, and that had to have been Strangleheart. Hey, some of us want it to go down. Strangleheart's lurking. Strangleheart is lurking. At least somewhere lurking. You already know. You already know. Man, I tell you what. So when Powell gets here, I promise I'll make myself smaller because, you know, we don't care about me. We care about Powell, man. It's his last. We gotta give the guy his last hoorah, you know, his last hoorah, his last stand. Here we go, man. It's gonna be a wild one, man. Volatility expected. Are we gonna trade the volatility, man? I personally, man, I don't know about you guys, but FOMC volatility, it depends. Like, it depends on the sentiment, because, you know, like, for example, last September, the FOMC, it was different, right? Last year was different, and I think we're gonna see the same thing. You know, we're gonna see the same thing. Now, I feel like sometimes I forget about how loud I'm being, and sometimes I might be screaming. And I need to work on that. I need to work on that. Sometimes I really think I'm screaming into this microphone, and that's probably not good. I apologize. Man, Greenfinger's coming through, man. Coming through with it. Coming through with it. Again, thank you guys for being here. Thank you guys for being here as we await Jerome Powell for his final stand as Fed chair. A pro-crypto Fed chair is very good, right? Are we bullish? Are we bullish? Because Bitcoin has already been on a tear, right? Backtesting $75,000. And looks like we are already losing. Okay, so look, ahead of the press conference. So look, we've had the interest rate decision. Okay. Manipulation definitely incoming. We've had the interest rate decision, right? So we are already doing the same thing that happened back here. So careful here, guys. Careful here. Key support levels coming up need to hold. Key support levels coming up here need to hold. Where do we stand here? Guys, we've got 23 votes on the poll in the chat. Don't forget, will Powell pump or dump on his final stand? It's like neck and neck right now. It's like 50-50. Nobody knows. It's like 50-50, guys. It's literally like 50-50. Hold on, hold on one sec. Hello? I am live right now. Yeah, you wanna turn it on and watch? Yeah. Really? Well, Oh, I was muted. I apologize. My bad. I was definitely muted. I appreciate you, bro. I appreciate you guys, man. Yeah. It'd be alright though. It'd be alright. Okay. What I do really like. Okay, so this is what I really do like. I like the fact that, you know, we're about to get a potential cross right there. Turn the roaster. Oh my god. Okay. Well, oh, there it goes again. Oh no, that's not good. That won't be good if it messes up right as the press conference goes live. That won't be good. All right, man. You said to do it. I'm gonna do it. I'm gonna do it. Okay. It's. I'm gonna just for the one. I'm putting one in for the team. Okay. I'm putting one in for the team today. That's what I'm doing, man. Just let me do it. Okay. Just let me do it, man. Guys, you cannot forget, though. You cannot forget. Cannot forget. Yubit right now, we've got, oh man, there's so many deals going on right now. I got so many deals going on between Yubit. I got a lot going on. Lots of deals right now. Lots of deals with Yubit, BitUnex, Yubit, WEEX, BTCC, BitFi. Definitely, all the links are in the description. All right, guys, here we go.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The U.S. economy has been expanding at a solid pace. While job gains have remained low, the unemployment rate has been little changed in recent months. Inflation has moved up and is elevated, in part reflecting the recent increase in global energy prices. Today, the FOMC decided to leave our policy rate unchanged. We see the current stance of monetary policy as appropriate to promote progress toward our maximum employment and 2% inflation goals. Developments in the Middle East are contributing to a high level of uncertainty about the economic outlook, and we will remain attentive to risks to both sides of our dual mandate. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand at a brisk pace. In contrast, activity in the housing sector has remained weak. In the labor market, the unemployment rate was 4.3% in March and has changed little in recent months. Job gains have remained low. A good part of the slowing in the pace of the job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including job openings, layoffs, hiring, and nominal wage growth, generally show little change in recent months. Inflation has moved up recently and is elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 3.5% over the 12 months ending in March, boosted by the significant rise in global oil prices that has resulted from the conflict in the Middle East. Excluding the volatile food and energy categories, core PCE prices rose 3.2% over the 12 months ending in March. This relatively high rate largely reflects the effects of tariffs on prices in the goods sector. Near-term measures of inflation expectations have risen this year, likely because of the substantial rise in oil prices. Most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5 to 3.75%. The economic outlook remains highly uncertain, and the conflict in the Middle East has added to this uncertainty. In the near term, higher energy prices will push up overall inflation. Beyond that, the scope and duration of potential effects on the economy remain unclear, as does the future course of the conflict itself. We will continue to monitor the risks to both sides of our dual mandate. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. This is my last press conference as chair, and I will close with a few thoughts. First, I want to congratulate Kevin Warsh on his advancement out of the Senate Banking Committee this morning. This is an important step forward, and I wish him well as that process continues. The Federal Reserve exists for one fundamental purpose: to foster the economic conditions in which American families and businesses can thrive. Stable prices, a strong job market, and a financial system they can depend on. Every decision we make, whether about interest rates or regulatory and supervisory matters or other issues, is made in service of that purpose. Our decisions reflect the collective judgment of the Board of Governors and the Federal Open Market Committee, colleagues who demonstrate analytical rigor, principled judgment, and a genuine commitment to the public interest. Our collaborative and deliberative process has long reflected a shared commitment to finding common ground in service to our mission. This institution is resilient, capable, and staffed by professionals of extraordinary talent and exceptional dedication. It has been a privilege to serve alongside so many great public servants at the Board of Governors and around the Federal Reserve System. The Fed's work is only as effective as the public's understanding of it, and you, the press, are essential to keeping the public informed about what we do and why. The people we serve benefit from your careful reporting. I welcomed the announcement last Friday by the U.S. Attorney for the District of Columbia that she had closed the criminal investigation. She also noted, however, that she would not hesitate to restart the investigation. Over the weekend, the Department of Justice provided assurances that they will not reopen the investigation unless there's a criminal referral from the Fed's Inspector General. And, absent such a referral, if they do appeal the recent court decision, they would not seek, as part of that appeal, to restart the investigation or send new subpoenas. I've said that I will not leave the board until this investigation is well and truly over with transparency and finality, and I stand by that. I'm encouraged by recent developments, and I'm watching the remaining steps in this process carefully. My decisions on these matters will continue to be guided entirely by what I believe is in the best interest of the institution and the people we serve. After my term as chair ends on May 15, I will continue to serve as a governor for a period of time to be determined. I plan to keep a low profile as a governor. There's only ever one chair of the Federal Reserve Board. When Kevin Warsh is confirmed and sworn in, he will be that chair. Once sworn in as board chair, his new colleagues will elect him to chair the FOMC as well. As I regularly point out from this podium, our success in delivering our goals matters for all Americans. I'm confident that the Fed will continue to do its work with objectivity, integrity, and a deep commitment to serve the American people. Thank you, and I look forward to your questions.
Thank you, Mr. Chair. Appreciate the kind words about the press. Often doesn't come from the podium in different places, but I appreciate that.
My guy, I appreciate
Can you talk
bro.
about what is gone into your decision to remain on the board? What kind of criteria are you weighing, and how long might you stay? Thank you.
Sure. So, my concern is really about the series of legal attacks on the Fed, which threaten our ability to conduct monetary policy without considering political factors. And I want to note here, this has nothing whatever to do with verbal criticism by elected officials. I've never suggested that such verbal criticism is a problem, and neither has anyone else here. But these legal actions by the administration are unprecedented in our 113-year history, and there are ongoing threats of additional such actions. I worry that these attacks are battering the institution and putting at risk the thing that really matters to the public, which is the ability to conduct monetary policy without taking into consideration political factors. It is so important for our economy, for the people that we serve, that they can depend over time on a central bank that operates that way, free of political influence. It's part of the absolute foundation of this amazing economy that we have. It's just one of the many reasons why the U.S. economy is the envy of the world. That piece of institutional architecture separates successful countries from unsuccessful countries. It is extremely important, not for the people who work at the Fed at any given time, but for the people that we serve, that the Fed remain able to conduct monetary policy in a way that doesn't get pulled into politics, trying to help or hurt any particular politician or political party. It's critical for the people that we serve. In terms of when I would leave, I will leave when I think it's appropriate to do so. Was that all your questions, or was that?
Well, I just have a follow-up, which is, what would you say to the criticism that by remaining on the board, you're actually taking a political act and denying President Trump the majority of the board, which as president he would have if you left?
I don't see that at all. As I mentioned, I'm literally staying because of the actions that have been taken. I had long planned to be retiring, and the things that have happened in the last 3 months have, I think, left me no choice but to stay until I see them through at least that long. In addition, I don't see how this will interfere. My intention is not to interfere. I was a governor for almost 6 years, and the tradition is at the Fed that governors who understand how difficult the role of chair is, and as a soon-to-be former chair, I do understand how hard it is to get consensus with 19 strong-minded people. You work with the chair. You try to be heard, but also collaborate with the chair and try to support the chair when you can. When you can't, you can't. And I think that's the attitude that people generally take, and that's the attitude that I'll take.
Nick.
Chair Powell, if I could ask about the inflation outlook. In March, you described the standard practice of looking through energy shocks as conditional on inflation expectations staying anchored. Since that meeting, there has been very little progress reopening key energy trade corridors. Can you help us understand how the inflation outlook has changed in the intermeeting period, beginning with the prospects for tariff pass-through resolving on the timeline that you had outlined in March, before getting to the energy shock that is now on top?
So, I would look at it this way. For a long time, we've been working on the hypothesis, really, that tariffs would lead to a one-time price increase and that would go away over time. In other words, that there would be no further change, so measured inflation wouldn't reflect that higher level going up more and more. And it's time for that to happen. We really do expect that to be happening in the next 2 quarters. So we'll be watching very carefully to see that what we've thought all along would happen. That's the kind of critical part of the forecast. We need to really see that. With energy, it's so hard to say. I mentioned, in sort of the textbook, you would look through an oil shock because they tend to be short-lived and they tend to revert, and monetary policy works with long and variable lags, so you wouldn't necessarily react right away. I think that is all the more true given that we're several years above 2% inflation and that we're already looking through the tariff shock. So I think we're going to be very cautious about that. But the question about looking through energy really is not in front of us right now. It hasn't even peaked yet. And I think we'd want to see the backside of that and progress on tariffs before we even thought about reducing rates.
So if I could follow up, the statement today preserves language that has taken on some meaning as it was socialized when the committee was actively lowering rates. Why is that easing bias still ripe, given how different the inflation outlook is now versus a meeting or two ago? And what more would have to happen for it to get evicted?
So that was, as you will recall, we had a discussion about that at the last meeting, and we talked about it in the press conference after the March meeting. We had the same today. We had quite a vigorous discussion about that very issue and the guidance, and is it still appropriate, and that kind of thing. And I would say that the number of people on the committee who either could support that language changing to a more neutral stance so that a hike is as likely as a cut, that number has increased over the intermeeting period, and it's easy to see why. I mean, it's a good question, right? You see, inflation has moved up over the interim a bit. Core inflation's 3.2 now, moving, albeit just a little bit, in the wrong direction. And we know that there will be, that there's headline inflation coming out of the Gulf, and we don't know how much that will be. We're going to need to see. So it makes all the sense in the world that people would look at that and we'd have a vigorous discussion about that. You saw that 3 people dissented over the language. I think all of those people agreed with the rate decision. So the majority of the committee did not want to do that, and I didn't think we needed to do it at this meeting. It really was just a question of why do we need to do that now? You know, we have so much to learn. There's so much uncertainty about the path ahead. There doesn't need to be any rush to make that decision now, because, you know, what happens in the next 30, 60 days, even by the next meeting, could really change the picture around that language. So, you know, it's a much closer thing on the committee than it was in March, and you know, that makes all the sense in the world, it seems to me.
Claire.
So Claire Jones, Financial Times. Just going back to this issue of the easing bias, we've now got oil approaching $120 a barrel when it comes to the benchmark Brent crude. If it stays around those levels 6 weeks from now, what would be your best guess as to whether the easing bias will still be in the statement? Thank you.
I wouldn't want to guess. You know, well, first of all, we're going to have new leadership in all likelihood by then, and new leadership's going to have a very important role to play in that. So I won't be standing here at this podium to answer your question. So I don't know. As I mentioned, that's all I can really say is that we had a great discussion about that today. It's gotten to be a better question in the interim period. We had the discussion. A majority are still on the page of not feeling the need to move to that level, and that's where I am. I get it, though. You know, at a certain point, you would move, and that conceivably could come as soon as the next meeting.
Thank you. Just to follow on, the new leadership also seem rather lukewarm on press conferences and on the dot plots. What would your advice to him be on these communication tools?
So I'm not going to give him any advice through you today here, but I think communications generally is. I think every incoming chair takes a look at communications, and it's a very healthy thing. I mean, communications it's very complex, and you can always be looking at new things, and if that happens, it feels like it's going to happen. That's a completely appropriate thing.
Neil.
Hi, Chair Powell, Neil Irwin with Axios. Can you tell us if you've been in touch with incoming Chairman Warsh? To what extent is this a normal transition process versus all the things swirling around, something unusual, and what can we expect when he takes that podium in a few weeks?
I haven't seen him since seeing him at a dinner in January where I congratulated him and had a nice chat with him. Haven't seen him. I don't know what a normal process is. You know, the last process was with Janet Yellen, with whom I had worked for 6 years, and so it was. We were sitting down the hall from each other, so it was a very different thing. I think this is and will be a very normal, standard kind of a transition process. So that's what I expect. I have every reason to think it will be.
Quick follow-up: is the Supreme Court ruling on Governor Cook a factor in when you may leave as a governor?
I wasn't thinking of it as such, but no, not really. I mean, I'm thinking more of the other things I mentioned.
Chris.
Hi, thanks for taking our question. I wanted to ask a question about your tenure, and Chris Rugaber at Associated Press. During your tenure as chair, you often spoke about how disadvantaged Americans benefited from extended periods of low unemployment. In the new framework the Fed adopted in 2020, some economists say elevated the Fed's employment mandate. Are you worried that the pandemic inflation spike that followed will make future Fed chairs more reluctant to pursue a hot jobs market, and should they be?
I don't know the answer to that. I mean, what we experienced in the teens, the mid-teens, was really low levels of unemployment for a long period of time and no reaction from inflation. And we all very much took notice of that. We also noticed that the biggest wage gains were going to people at the bottom end of the income spectrum. And we had many, many reports of, it felt like a fairly stable equilibrium, and a lot of benefits were flowing to people at the bottom end of the income spectrum, including companies were, setting up in people who were confined and like training them before they got out. And it was a very healthy sort of set of societal dynamics. So of course, I think anybody would love to get back to that. I don't think that anything that happened to create the global pandemic inflation was in any way related to overweighting the employment market. I mean, it was a global shock that happened essentially very, very similarly all over the world that had to do with closing, reopening, stimulus, and all that. And I mean, you could look at a graph of 10 big economies on the page and not know which was the U.S. and which was Germany, France, and things like that. So I don't think that insight was in any way responsible for the high inflation that we experienced. So, I mean, I think it's always been a balance. You've got to be strong on both of our dual mandates, and we for example, now we don't feel that the labor market is at all a source of inflation, so we don't need to be worrying about that. It's been a long time since we have had to worry about that. Well, actually, during the pandemic recovery, the labor market was super overheated and tight, and that's when we had to worry about it, but not now.
And just on the other issue, do you need more assurance from the Justice Department before stepping down? Is that what you're waiting for, or what else?
I'm waiting, for the investigation to be well and truly over with finality and transparency, and I'm waiting for that, and I will leave when I think it's appropriate to do so.
Michael McKee.
Michael McKee from Bloomberg Television and Radio. I'd like to ask you if you could explain a little more or characterize a little more the discussion about the two-sided view and interest rates, because there were some members of the Open Market Committee who've been suggesting that we may need to raise interest rates even absent the war because inflation was not coming down fast enough. Is there any sense that interest rates might have to go up, or was this just a setup to sort of warn people that you're worried about the war impacts?
So nobody, the three dissenters and others who could have supported that, and others who were voters and non-voters who preferred it, they all supported the rate decision, right? So people are not saying we need to hike now. It's more a question of, don't we kind of feel that we should be neutral? And what are markets doing? People argue that this is consistent with markets are doing. And again, it's a very fair question, but these changes, it's a form of forward guidance, and you want to make them in a way that will be sustained and continue to make sense, and not something you need to take back, fairly quickly. So I think a group of us, including me, didn't feel like we needed to be in a hurry on that. That markets are not confused about our reaction function. We don't have a problem to solve on that. But the other side of the argument is a good argument too, as I mentioned. It's a perfectly good argument to be having, good discussion to be having. So, and it came out the way it came out.
Well, you've got three dissents in favor of two-sided warning. You've got yourself staying on the board. You've got the criticism that does come from elected officials, and you've got a lot of critics who have faulted the Fed for being too slow 2021 with inflation. Are you worried about Fed credibility under all of this? Is that one reason that you want to stay on?
Not driving my thinking now. I mean, monetary policy is going to get made by, 19 people. There's a lot of stability there. I mean, if you think about it, every new Fed chair has the same situation, which is you've got 18 colleagues on the FOMC, 11 of them vote during any year, and your job is to create consensus. It's to talk to them, understand them, be inside their thinking, and be able to pull them together and get consensus and move. And that's what every Fed chair has to do. And I think Kevin Warsh is actually quite well. He has the capabilities, skills to be very good at that, I would think. So I think I'm not so worried about that process. I think that'll work itself out.
Howard.
Thank you, Chair Powell. Howard Schneider with Reuters. You mentioned that staying on as a governor, you intend to keep a low profile. I'm just wondering if you could give us a little more detail on what that looks like and how you can Touche. Walk down the steps. What that looks like, and particularly around the policy discussion, how you're able to have your intervention and not be a shadow chair and not have a kind of an outsized influence over the process.
Yeah, that's just something I would never do. The shadow chair thing. No, I don't know what the exact specifics of it will be, but I'm going back to being a governor. I respect the role of chair. I was a chair. I was a governor for 6 years, and I know what that's like. I know, and I had a pretty front row seat particularly with Chair Yellen, to whom I was close when I worked with Chairman Bernanke for 2 years, but I was brand new at that time, so I got a sense of what it was, and I had real sympathy for how hard it is to get that group to consensus, and I always felt like I don't want to add to that unnecessarily, and that means try to support the chairs where the direction the chair wants to go in, if you can. If you can't, you can't. And I think that's the way it's always worked there, because the chair only has one vote, plus the ability to develop consensus. And if people won't be, they won't, if they're not flexible at all, then how do you ever do that? And so that's why the authority the chair has really is to develop relationships with people and work with them, and then put something forward that has consensus. And I propose to be a very constructive participant in that process, really out of respect for the office of the chair.
And in your view as a soon-to-be governor, how do you see the risks of oil prices bleeding into core inflation in coming weeks? Because it seems like the commentary that was coming from particularly some of the Reserve Bank presidents, they were elevated concerns about the bleed into core. And, here we are with 3 dissents now. What do you see as the prospect of a core inflation?
Those prospects are real. Remember, though, and they're real, and the real thing is we're going to have to wait and see. We're going to need to see. And the good news is we think our policy stance is in a very good place for us to wait and see. We're right kind of at the high end of neutral or perhaps mildly restrictive. The labor market shows more and more signs of stability, whereas inflation is kind of misbehaving. And so maybe a little bit of restriction or the high end of neutral is just the right place to be. So we can wait here and see how things work out before we act. And we'll see how much how much does come through into core. You see it already in airfares, of course, but you may see it in many other places. We just don't know yet, and it's so unknowable, because how long will the strait be closed? You can develop any number of scenarios that you want, but we really won't know until we know. So fortunately, we're in a good place to wait and let things develop.
What is going on, RK? Buy the dip.
Thanks, Mr. Chairman. You started holding post-meeting press conferences for every meeting as opposed to the ones with with SEPs.
I did.
Can you talk about why you see that as a net positive?
So we always said, when we were doing quarterly press conferences, we always said we can move at any meeting, but we only ever moved at the quarterly SEP meetings where we had the press conference. So if you think about it, during the pandemic, we were moving like a lot at every meeting and sometimes between meetings, and doing that without a press conference, I think, would have been quite challenging. It's become the industry norm. It's the standard.
Man.
I don't know whether that has to remain that way. I don't know. I mean, it's just something people have become used to, and I do think it's quite helpful to,
It's okay,
it's
okay.
I mean, I try to deliver a message on behalf of the committee
some reason
rather than 18 other people going out and delivering their message, and it's,
Yeah.
it's going to be all over the place, because we do, thankfully, have widely disparate views.
Okay, thanks. The other thing I wanted to ask about was the communications review from last year. Could you describe the debate last year, what changes were considered, what you wanted, and what prevented any action on those changes?
So, I'm not going to go into the real small specifics, but what we found very quickly was that making changes, making really large changes, for example, to the dot plot or the SEP, it didn't have, we couldn't come up with anything that had really broad support on the committee, and so we just moved on. We didn't really do as much on that as we might have. And I was never the world's biggest fan of the dot plot, but you can't beat something with nothing. And we've looked at a bunch of things, and it's something, like I said, I think every
no, it
new
was on
chair is going to look
BTCC.
at our suite of communications and think about what would be changes. We are the only
what is
major
this one
central
just
bank that
kept
doesn't
going,
publish a
man?
forecast. And that's because we have a 19-person committee, and you try to do that at the board. That's hard. At the committee, that's hard. It's hard if you do it at the staff. So it works. I think our communications are fine, but looking at doing it in a different and better way is the most natural thing in the world.
Thank you. Colby Smith with the New York Times. If I could follow up on
problem
Mike's
is
question about hikes,
liquidation levels
are we right to
too
assume that the
close, I
hawkish
think.
outcome for the Fed is still one in which the committee just extends the pause in rate cuts? And to what extent is there a growing sense within the committee that monetary policy really isn't just restrictive at all right now? The economy is holding up relatively well despite this major energy shock. The unemployment rate has ticked lower. Inflation was moving sideways even before the war and is now moving higher. So where is the committee at on that debate?
Where we're at is we think our policy rate is in a good place. If we need to hike, we will certainly signal that, and we will certainly do it. And if we need to cut, then, or if it's appropriate to cut, then we'll signal the opposite. I think because we feel like we're in a good place to move in either direction. Nobody's calling for a hike right now, so it really is going to depend on how things evolve, and that's really where it is. As I mentioned, much closer question this cycle on changing the guidance, but ultimately we didn't.
And as it relates to the war, at what point do you think the risk to growth will be larger than the risk to inflation as this conflict drags on?
You just have to find that out empirically. Given our the fact that we're a big exporter of energy, and that our economy is far less energy intensive, oil intensive than it was during the 70s, the effects on the United States are really substantially less than those of Western Europe or Asia, who are feeling much greater effects from these things. The effects we're feeling in the current situation currently, and in sort of what's priced in, which is a relatively quick outcome. If this goes on for much longer and prices go much higher, then we'll feel that much more. And of course, I'm talking about aggregate inflation numbers. We're very well aware that people are experiencing higher gas prices all over the country now, and that hurts. And those hikes may continue to happen. And other things are going to start to reflect airline fares I mentioned, and other products and services that are dependent upon petroleum and derivatives of petroleum. People are going to start to feel that.
Edward.
Thank you, Chair Powell. Edward Lawrence with Fox Business. So I guess I'll just ask you directly on this. The markets don't see a rate cut at all this year, is what they're predicting. Do you think that we are at the neutral rate? Why or why not?
The neutral rate is we cannot know it with certainty. I think pretty close to the neutral rate. Yeah, I always had it between 3% and 4%. We're a little north of 3.5%, so that's well in the range of what I would consider a reasonable, but at the higher end of the range of what I would consider reasonable neutral rate. I think the labor market is still probably cooling off just a little bit, and I don't think there's much of a case for any case really for policy looking meaningfully restrictive, maybe mildly restrictive or neutral, I would say.
And I want to follow up on some of the other questions about your future a little bit. The first time we've seen four descents now since October of 1992. Are you handing off a divided Fed?
The thing to remember is we have always had vigorous debates, and they're excellent debates. I have to say they've been really good, and we're in an unusually difficult situation. So we've really had 4 supply shocks. You can say more than 4, but at a minimum, we had the pandemic, we had the invasion of Ukraine, we had tariffs, and now we have Iran and the oil, the oil spike. So every every supply shock has the capability of driving inflation up and unemployment up. And what do you do?
If it could do this in a few minutes,
the
then
central bank has a
yes.
really hard time knowing what to do. So the right thing to do
A
is to
few
try
minutes
to
versus
balance the
9
achievement of
days.
those two goals, and that's what our framework calls for us to do. But these are really tough, difficult judgments. You've got to have a forecast for each variable. You've got to think how long it's going to take to get back to target. You got to think how restrictive or not is policy. So it's only natural that you have a range of views on the committee. You know, people are going to see it different ways. They're going to have different risk tolerances and that kind of thing. I mean, if everybody agreed, that would be surprising. I think it's partly a function of the extraordinarily challenging set of supply shocks that we've been dealing with now for 5-6 years.
I'd rather look at Powell.
Thank you so much, Chair Powell. Selena Wayne with ABC News. Are you confident that Kevin Warsh will stand up to political pressure from President Trump?
So he testified very strongly to that effect in his hearing, and I'll take him at his word.
And when it comes to gas, right now it's over $4 a gallon. Inflation just hit a 2-year high. Should Americans expect to be paying higher gas prices for the rest of this year? And in your view, does that take a rate cut off of the table? And secondly, by staying on as Fed governor, what message do you think you're sending to the president?
I don't know what gas prices are going to do for the rest of the year. And it will depend on how long the strait remains closed and how quickly it can be reopened and that kind of thing. But remember, when gas prices go up, that's disposable income coming out of people's pockets, so they're going to spend less on other things. So there will be a hit to GDP. So it's a question whether spending goes down to offset the inflationary effects. So it's not, the answer isn't obvious ex ante whether you should move your rate over because of that. We'll have to see how it evolves.
And the message it sends to President Trump by staying on?
I'll stand on what I said earlier.
Victoria.
Hi, Victoria Guido with Politico. During your tenure, Fed independence has come under pressure in a lot of different ways. And I was just wondering, practically speaking, where do you see Fed independence as coming from? Is it the law? Is it political support from Congress? Is it the actions of the Fed? What sustains Fed independence?
Well, it's to a significant extent, it is the law. And, we've had to go to court to successfully so far to defend it. But the law does create a setting in which the Fed can and is directed to make monetary policy without consideration of political factors. And so part of it is the law. But it goes beyond that, though. There's a set of customs. There's a boundary line between the Fed and the administration, between the Fed and the Treasury Department. And we need to continue to respect those boundaries about what the Fed is responsible for and what the Treasury is responsible for and what the rest of the administration is responsible for. So some of it is legal. In fact, it's all legal at the end of the day, but it's more than just monetary policy. We don't want to use our tools we haven't wanted to use our tools to achieve goals that are really clearly outside our mandate. Every administration looks at our tools and thinks, yeah, it would be good to repurpose those to serve other purposes, but that's dragging us into politics and into fiscal policy. So we've resisted that.
Well, and maybe another way of asking it, too, is do you think that Fed independence is as strong now as when you became chair? And if so, why?
Look, I think it's at risk. I mean, I think these legal assaults, if you will, as I mentioned, the institution is being battered over these things. We're having to resort to, the courts to enforce our legal, it's not so much independence. It's really the ability to make monetary policy without political considerations. That's what we're talking about, and we've had to do that, and we've been successful so far. But that's not over. None of that is concluded yet, and it's really important. It's not about people who work at the Fed or the institution. It's about the benefits of a central bank that makes decisions based on analysis and our best thinking, rather than trying to help or hurt politicians. It's that there's a bright line between central banks who do one and do the other, and successful countries have uniformly, successful advanced economy countries have a really strong set of protections around their central bank just for that reason. So that's what it's all about. I think I am confident, as I said in my remarks, that the Fed will continue to make its decision based on analysis, rigorous analysis, and not on political considerations. But we've had to fight for it, and I'd like to think that I'd like to think we can get out of that era and go back to respecting, what the law says and what custom has been, which is to, let the Fed do our thing. It's an institution full of human beings who work super hard to get things right for the benefit of the public. We're all human. Don't expect for perfection, but do expect us to make, decisions without political considerations and the very best analysis we can bring.
Katerina. Katerina Saraiva, Bloomberg News. How would you characterize what you've heard from your colleagues on your decision to stay? Do you have their support? And then have you heard concern from your colleagues about continued legal attacks from the executive branch? Is this something that others have, talked to you about?
So I think that I don't want to report on what my colleagues think. They can speak for themselves. But there are widespread concerns that these things may continue. That's all. That's all I'll say. And and that would be a problem. And so.
And then I just also wanted to ask about Governor Waller's speech on the reserve banks. Do you have any thoughts on centralizing some of those functions in the way he described? And then are you concerned that something like that could potentially be a slippery slope to, to consolidate reserve bank functions even more in such a way where the central bank ultimately loses some of that important regional information?
So we try to be good stewards of the public's money and efficient, and Chris in particular, Chris Waller is particularly passionate about that. Of course, so are the reserves, so are the presidents, and it's a question of how do you accomplish it. We of course, and Chris said this in his speech, we want 12 strong, independent central banks with their own staffs and their own monetary policy views and all that. But there are things that are done in all 12 which could well be done at one much more efficiently and with cost savings. And so there's a back and forth going on that, but everybody's on the same page. The other thing he touched on was the idea of removing reserve bank presidents from office over different views on monetary policy. And I would just agree with him so strongly that would be the beginning of the end of the Fed's ability to make monetary policy independently. If every administration could come in and do that, you're just another cabinet agency at that point. So that's not something that I would support. Chris said the same thing.
Christine.
Even though we got a 15-minute.
Thanks, Chair Powell. Christine Romans, NBC News. I want to ask about legacy. When the history books are written, how do you think your stewardship at the Fed will be remembered for the past 8 years?
I'm going to just say that that's for someone else to say. I'll give you a mulligan on that.
All right, I'm going to ask you about misbehaving inflation then. You talked about those 4 big shocks, supply shocks over the past 5 years, and inflation still misbehaving. What's your message to American families who feel like inflation has not been under control for them really since the COVID reopening?
We're committed to bring inflation back down to 2% and sustainably. That's our goal, and we'll stick at it until that happens. We keep getting these events keep happening, which keep driving up costs.
That freaking line, bro.
The best thing we can do is to use our tools to guide inflation back down to 2%. I think trying to get there really quickly could be very costly in terms of job loss and things like that, but we try to get there over time in a way that does the least damage possible, and our commitment to that is never-ending and unshakable.
How would you describe the economy outside of the misbehaving inflation? I mean, it's still awfully resilient given all of the blows.
I don't know that you can be awfully resilient. So it's actually quite resilient, I would say, because it's a positive thing. If I can have that amendment, yeah, growth is really solid across our economy. Some of that is that consumer spending is hanging in pretty well. The most recent data are good. And some of it is just the apparently insatiable demand for data centers all over the United States. So a lot of business investment going into building data centers, and every reason to think that that continues. So you've got an economy that's growing at 2% or better. PDFP, which is private domestic final purchases, which is really a better signal of a momentum in the economy, is actually higher than that. So that's a positive thing. If you look at the unemployment rate, it's 4.3%. So that's a low rate. That's pretty close to mainstream estimates of the natural rate. We've been there for a long time. So it doesn't feel like a good labor market to some who don't have jobs, because quits are really low, hires are really low, and there's effectively no new net job creation. So that's in a sense, the labor market is in balance. But it's an unusual and uncomfortable kind of a balance where people who don't have jobs will have a hard time breaking in unless somebody quits their job. So that's pretty good. Inflation is the thing we need to work on, and it's partly tariffs, which we think that inflation should subside over the course of this year, because it's kind of a one-time increase. It shouldn't be repeated, and that should start happening pretty soon. The energy inflation that we're getting should go through fairly quickly. And we'll just have to see how that works out. In the meantime, we think our policy stance is in a good place for us to hold and wait developments.
Jennifer. Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. At the risk of beating the dead horse here, clearly 3 members objected to keeping that easing bias in the statement. And you said that the majority still didn't need to move to new language at this point. So does the majority of the committee still have a bias towards cuts at this point, or has the bias on the committee shifted away from cuts towards holding or hikes if that was needed?
So I think that, the center is moving toward a more neutral place, and that's sort of what markets are saying too. I just think, there's a lot of signaling going on when you change guidance like that. And so we just, I guess a majority of us didn't feel like we needed to send a signal on that right now. But maybe it'll come to that. And the reason is because, we're kind of waiting to see what happens with events in the Middle East and what are the implications of those events for the U.S. economy. So there's a group who feels like we don't need to be in a hurry to do that. We get it. And of course, we will move to a hiking bias if we want to hike, and we'll move to a neutral bias before that. But there was a difference over whether to do it at this meeting, at a meeting at which all but one of us agreed that the rate decision was correct, which was not to move.
And you just said moments ago that you believe Fed independence is at risk. Is it safe to say that you want to stay on as a governor to serve as a check and balance on that?
I want to stay until I will stay until I feel it's appropriate for me to leave. And yes, that is really what is driving this. I'm not looking to be, a high-profile dissident or anything like that. I'm more looking at the other aspects of this and wanting to see that things have calmed down and we're returning to a traditional model of working with the people that you have and bringing them to consensus and respecting that consensus. That's what I'm hoping to see.
Matt Egan.
Thanks, Chair Powell. Matt Egan with CNN. You've made many tough decisions in your time at the Fed, and as your time as chair comes to a close and you think about your tenure and perhaps your legacy, are there any decisions that stand out as ones that you're particularly proud of? And are there any that, with the benefit of hindsight, you would take a mulligan on?
Yeah, it's hard. I wouldn't want to single out individual things at this point. I'll just say, we, all of us together, have consistently tried to do what we think is best for the American people based on our tools and our objectives that Congress has given us. it's been very challenging because we've been in a situation of supply shocks really for 6 years. And that's just a very different situation than for a very long time. What the Fed and other central banks were doing all the time was demand management. And, and there was always the inflation mandate, but inflation was low for 25 years. So this is a very different world and a much more challenging one where you have to balance the two objectives. And by the way, central banks that have an inflation mandate have to do exactly the same thing because they're balancing economic activity. So that's been challenging, and we've tried to do our very best through these really challenging times, and I'm really proud of the work that I've done, that my colleagues and I have done during these years.
Now, to follow up on some of the discussion around Fed independence, can you explain to the public why this notion of Fed independence, which might sound kind of wonky to some, is so critical? I mean, what are the consequences if either the Supreme Court rules against Lisa Cook or the Fed in the future decides to make decisions more around the political calendar instead of the economic data?
So every major advanced economy in the world has made the same decision the United States has made, and that is that they want to take the making of monetary policy, the setting of interest rates to support the economy, to achieve maximum employment and price stability. They want to take that out of the direct control of elected politicians. And the reason is elected politicians are always running for election, and they'll always want low rates, and that will lead to inflation over time. So after literally centuries of experience with that, the whole world moved to a different model, and it's worked great. I mean, this is the era in which inflation was under control for 40 years. Then we had the pandemic inflation everywhere in the world, and now we have inflation that had gone pretty much all the way back to target, really close to all the way back to target, and now is being buffeted by the energy shock, and the U.S. buffeted by the tariff shock as well. So what I would say to the general public is that's the backstory, is that don't think about an institution being independent. Think about it this way, that you want people to make monetary policy and set interest rates to benefit the general public and to try to achieve economic goals, which are maximum employment and price stability, and focus only on that and ignore political considerations completely. Ignore them. This isn't bipartisan. This is nonpartisan. So we want to just work directly for the American people doing these things. We don't think, oh, I want to do this because the president says it's a good idea, or because there's an election coming up and I want to speed up or slow down the economy. I mean, think about that. If that's what we were doing, we'd have no credibility. Markets would lose faith in us, and our ability to control inflation and have any respect would be gone. And let me say, whatever people say, the markets believe that we will produce 2% inflation. If you look at longer run expectations, markets believe that there's no sense in which our credibility in the markets has weakened. It's just not the case. It's people do get it, that this is our commitment and that we will achieve it, and it's priced in. If you disagree with that, then you can go ahead and bet against the markets, but the markets are pricing in Fed credibility.
Okay, we'll go to Richard for the last one.
There it is.
Thank you, Chair Powell. Richard Escobedo with CBS News. We talked a lot about gasoline prices, and you mentioned airline ticket prices, both of which are up dramatically because of the war in Iran. And so I wonder, are you seeing that weigh down consumer spending in other parts of the economy? And if so, how worried are you that that will be a drag on growth?
You don't see it in spending yet. You really don't. I mean, as one of your colleagues said, the economy has been resilient. It really has. Not just this time, but it's been remarkably resilient for some years now. The U.S. economy has just powered through shock after shock, and consumers are still spending, and that's what the banks will tell you, credit card companies will tell you, the retail sales numbers that we got most recently. People are still spending, and how long can that go on in a world where if gas prices were to go up a bunch more, that's taking otherwise spendable money out of people's pockets. But right now we don't actually see much slowdown yet, certainly none from this, but you think logically you will, because people have a certain amount of money to spend. If they're spending 25% more on gas or something like that, then that's going to come out of other spending. But we don't see it yet.
One last thing. You mentioned those economies in Southeast Asia that are particularly dependent on petroleum. They make a lot of the stuff that American consumers buy. So was there any discussion today about whether or not those costs getting passed along to consumers is a real concern, and whether or not that might push up inflation?
So all of those things are in the models that we use to calculate inflation. So they're just parts. You can ask about anything like that, and they have a place. The staff has a place where they're looking at that and pricing in what will happen with higher prices and that kind of thing. So it's there. The effects are not that big yet. We're a huge economy. The import sector is only 10% of the economy, so we're not like a European country where 50% of the external of GDP is in the external sector. We're also, as I mentioned, we're an oil exporter, so we're not feeling the same kind of pain, and we're not likely to feel the same kind of pain that economies in Western Europe and certainly in Asia are feeling. Anyway, thank you very much, everyone.
Goodbye.
I won't see you next time.
Goodbye. He's probably so happy he don't have to do that no more. He's probably so happy he don't have to do that no more, man. I mean, really. Well, that was that, man. And then, I don't know, now we're just going to dump, right? Yep. There it is. Oh my gosh, what the heck? Take it. Just take it already. Just take that. What? Oh no. 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 Dude. If somehow that manages to survive, dude, no way. No. If somehow that survives, bro. There's no way. There's no way it will. There's no way, right? There's no way. There's no way unless somehow Powell just pumps the market for some reason because he said sayonara. But there's no way that survives, man. There's no way. It's coming. Oh my, it's coming. Bro. No. 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 There's no way, bro. It's gonna come right on down, and there's just no way. Oh, we about to get marked. We about to get marked. Dude, that's crazy, bro. That is actually crazy, bro. Oh, here it comes. What? What? There it is. There it is. Ah. There it is. Ah. That's okay. It was $20. Not even that, I don't think. I don't play around with the FOMC volatility, man. I already made my money with my Doge trade. I already made my money with my Doge trade. Definitely. Now, we got to see. You know what I'm saying? Definitely made the money with this one, though. This is a good trade. But it was also lower leverage. But look at this. Look at this. Of course, it's just gonna come down and oh my. Well, another good, beautiful FOMC stream, man. Great. It's been nice. Thank you guys, man. I gotta get out of here though. But thank you guys, bro, for chilling. Bro, we gonna make it, man. Oh, wag me. Oh, all right, man. See y'all in the next one. Hopefully soon. Hopefully soon.